Hello again. Now, the South African Insurance Association is going to be participating in the Money Smart Week South Africa. In fact, it is participating because the week is currently underway. This is a financial literacy campaign aimed at motivating and empowering South Africans to become more educated about their finances. Let's now discuss the importance of the non-life insurance products in safeguarding your assets during these tough economic times. I'm joined by the Transformation Manager at the South African Insurance Association, or SAIA for short, Zanele Gigaba. Ms. Gigaba, good afternoon. Welcome to today, and thank you very much for your time. What is a non-life insurance product?
Good afternoon, Dan, and good afternoon to the eNCA viewers at home. Non-life insurance, or what we used to previously call short-term insurance, is insurance that covers your assets. That includes your motor vehicle, your house, your contents, and those are the basic ones. We do also cover businesses.
Okay, so why are they so important? Why are these short-term insurance products or non-life products are very important in these times for people to protect their assets?
So let's think about it this way. Assets are normally a long-term goal for most people in South Africa, which means you have one chance to buy a car or a house for most of us. If anything happens to that, it normally you normally don't recover. And most of these assets are bought through debt. So if you say you buy a car, for say 250,000 rand, via finance, and then it's stolen and never recovered, or it's a total write-off, you still have that debt to pay off. And insurance comes there in that it allows you to be able to survive those shocks and be able to get back on your feet faster.
You know, we're living through tough economic times. The cost of living is very high. And I guess people would look at their budget and how far they can stretch their income. They might be tempted to cancel a non-life insurance product. And from what you've just said, it's not advisable.
So yes, canceling your policy may seem to be the best thing to do in the short term, but canceling your insurance policy is not a budgeting strategy. It will never be a budgeting strategy. So what I would advise viewers to do is to make an effort to look at their insurance policies. And maybe you'll give me an opportunity to discuss some of those techniques that we can do to save on insurance instead of canceling insurance.
Well, let's get right into them, because I was wondering what options would there be for somebody who's weighing up their options and thinking, this is costing me a little bit much, you know?
So let's look first then at, say, your motor vehicle, for instance. Let's say it's paid up. Let's say maybe it's 15 years old. So it's not that expensive. So you could look at reducing cover, moving from a comprehensive insurance to what you call third-party fire and theft, which would then help you in the short term. In case your car is stolen, it's still covered. In case it bursts into flame, it's still covered. You probably won't be covered for it if you get involved in an accident. But you still have cover, and it's cheaper. So if you're not, if your car is not financed, then that would be one option. If you, for instance, look at your house, you could increase your security, and you could do what we call, for instance, adding what we call this, we call additional excesses onto your policy. For instance, you could say to your insurer, I'd like to have the first 10,000 rand or loss I would cover. That goes a long way in reducing your premium in the short term. So what does it mean? It means that when you have a claim, for instance, a break-in, and you lose, say, 12,000 rand, the first 10,000 rand is yours. But in a total loss for a house, for instance, that's 500,000 rand, 10,000 rand is not that big of a deal. So you could consider those things in the short term.
So there are a number of those options. And will most insurers have these various options available just broadly?
Broadly, most insurers have this available then. And also having a good relationship with your insurer, calling them and speaking to them helps. You might find that you haven't had claims for a long time, so you can call them and negotiate your premiums down, or you could consolidate your policies into one insurer. That will also assist you in saving your premium. I've had recently a 1-hour conversation with my broker discussing my policy renewal. Reviewing your policy on an annual basis is the best thing that you could do. What I found that I had a tablet that had long been disposed of and 2 cell phones that I had to cancel. That way in my policy, I think for 6 months, post when I needed them to be there. So those are some of the things that you could do. Look at your policy. I think what we're asking for, or we're advising viewers, is that like if you look at Money Smart Week, our theme for this year is plan your money, plant your future. Planning your money is paying attention on where your money is going. And that is even more important for insurance going forward. You could plan your money by reviewing your policy, getting intimate with it, understand what's covered, what's not covered, understand what would happen in different scenarios. That goes a long way in ensuring that you save on the policy.
You know, dealing with money and discussing money issues at the best of times can be very intimidating, and the insurance space can be very complex in terms of, as well, of the language that is used. How important is it in this process you've just described? You've mentioned a broker. How important is it to get the right advice from the people who are in the know?
It is very important, and our consumers have a right to access an advisor, a qualified advisor to assist you. So that could be directly with your insurer. It could be through a broker, like I said, also. So it's just a matter of just giving them a call and making time to actually just sit and listen and ask questions. And also, I think what's important is knowing what to ask for. If you ask the right questions, you should be able to actually get to understand how the policy works. And also when your life changes, for instance, if you now have a child that just got their license, call your insurer. Find out if they can drive your vehicle. Because sometimes you find that your vehicle has, you've limited your policy to just being you who's driving it. So getting your insurer understand the changes that you are experiencing in your life is very important for you to be educated. And you don't pick up at claim stage that actually I made a mistake.
Is it wise with household goods or household assets in terms of reducing the premium, to remove some of the items from the list that is covered?
Depends on what policy you're talking about. In terms of, for instance, your what we call householders, which is your contents. If you remove some of the assets, and so for instance, your furniture and all the contents of your house is worth 200,000, and then you say, I'm going to insure for 100,000. What happens when you have a claim and you lose your TV and your TV is worth 15,000? And I know some of us like expensive TVs. They're going to pay you 7.5, because then what we call average comes in because you are underinsured. So what you're doing is very dangerous. Rather go for maybe a higher excess, but reducing cover will definitely lead you to being underinsured, and you're not going to get the full benefit of the claim when you actually launch it.
Zanele Gigaba, thank you very much. She's Transformation Manager at the South African Insurance Association, speaking to us as one of the participants in this week's Money Smart Week, which is set to end on Sunday, the 3rd of September. Thank you for some of the tips there that we got. If you're not sure, please speak to an advisor to guide you. I know times are very tough, and we're all looking at how we can stretch that rand, that cent, that bit of cash you may have, but just be mindful of not exposing yourself to more financial headaches if, you know, the proverbial hits the fan.